So according to a recent Bloomberg research, the cumulative value of EV sales will reach an amazing number, $57 trillion worth by 2050. And this is the base case. We're literally just at the very beginning innings, and any EV company who gets any kind of foothold will have a very lucrative future. But this is much, much more than just auto companies. This is so large and so important that countries themselves are fighting now to make sure that they win. So today, let's review this video clip by Bloomberg talking about what they call the 5 flashpoints that are forecasted to happen. We're going to look at how China is faring, how Europeans are faring, and why Tesla raised the Chinese car prices. We've got Larry Goldberg with us. He's a regular in this channel, multi-entrepreneur, and a longtime investor in Tesla. Welcome, Larry.
Thank you. It's great to be here.
This is pretty big research on Bloomberg that they just released, and they showed that the EV market's potential by 2050 is massive. They believe that this is a massive revolution, $57 trillion up for grabs. So, and this is interesting because this is their forecast, which is actually very, very, very conservative in my perspective. By 2030, the black bar is battery electric, the pink is plug-in hybrid, and then the blue is hybrid, and then the yellow's ICE cars. So by 2030, they think, if I look this around here, it looks like just 30 million is going to be EVs. And you and I believe it's going to be way more than that by 2030. But even in this case, what they're saying is that it's so massive. This person basically said that means if Tesla can capture 20% of the EV market, that's going to be worth $11 trillion just for Tesla. By 2050, of course, that's 2050. So let's watch this video and then I'll get you to react to it.
For the world economy, what's at stake?
There's a lot of money at stake, and there's a lot of relationships that are going to be frayed. There's a lot of jobs that are going to be won and jobs that are going to be lost. Using Bloomberg NEF forecasts, they see the cumulative value of EV sales reaching some $57 trillion worth by mid-century. That's in their base case. If you start to put in some more incentives to ditch those gas-guzzling vehicles, then that number could be $88 trillion in cumulative sales. That's from very low levels right now. So you can see there's a lot at stake for automakers and the economies that are reliant on auto industries.
This rapid change, Malcolm, is causing what you describe as flashpoints across the global economy. Can you give us a couple of examples of how you see this playing out?
Sure. We spoke to reporters right across the world, had lots of candidates for these flashpoints. In the end, we chose just 5. But some of these are flashpoints around the environmental considerations that are in play. Some are right about jobs, and some are about geopolitics. To speak about the latter, a couple of examples. In Mexico, for instance, President Biden's very juicy perks to produce in North America, incentivizing a whole bunch of automakers to set up shop in Mexico with big investment plans to try and boost their sales to Mexico. In the meantime, China's beaten them to the punch. They're ramping up their sales to Mexicans. So that's creating this tension point that's probably only going to get accentuated as elections take place in both Mexico and the US next year. In Thailand, the tension is between the legacy Japanese automakers, which helped turn Thailand into what's known as the Detroit of Asia. Now, as the Japanese scale back, and they've been a bit slow to move in the EV space, the Chinese investment is pouring into Thailand. And that, of course, is being welcomed as Thailand authorities know that they need to keep the jobs flowing there. EVs, we've got to remember, take less parts than internal combustion engine cars, and that means less jobs. So you need to really incentivize investment in battery technologies if you're going to offset that for your industry. For Thailand, that's crucial for keeping jobs and keeping that auto sector as a real driver of their economy.
So, Malcolm, in terms of automakers, who are the winners and losers?
Well, just broadly speaking, from the macro sense, the winners are likely to be the ones that are leading the charge here in EVs. The Chinese EVs are tending to be lower in cost, so we're probably going to see more sales to other emerging economies there. The US EVs tend to be more in the premium segment, so they may be more profitable, but maybe less volume. But overall, if you look at those numbers and they play out as BNEF expect, you know, by mid-century or even by the mid-2030s, we should see EV sales eclipsing internal combustion engine sales. So automakers are not, they're not stupid. They're going to be investing in EVs. There's going to be less investment in the traditional space, and the economies that are slow to work into the EV space are probably going to fall behind.
Okay, huge. He said 57 trillion. He said 88 trillion, depending if you get incentives. And then it's not just automakers; it's a land grab, but countries. And I don't know if you saw that. It said China owns 80% of the lithium available, minerals out there. It's a war. This is so big and important. What's your comments?
So my first comment is that I've done some research on Bloomberg NEF. You know, I've been a subscriber for some time, and I've done some research on them in preparation for today's call. And I have to tell you, Bloomberg NEF are very, very conservative. They have been behind the curve for the last 3 years that I followed, and I suspect even further behind that before they were NEF. So the important news is that their number of 57 trillion by 2030 may be off by several years. In other words, I think we could see that 57 trillion earlier than 2030. That's my reality. The second thing I would say is I think they've got it exactly right. But one thing I will tell you is that the lithium land grab is not just about China. Exxon yesterday announced that they were investing in a lithium mine, and a very big lithium mine, well, big in US terms, in Arkansas. And they have actually already bought the rights. They have already started to apply. And, you know, they're very serious about it. So they see lithium as the new oil. And, you know, they have a lot of expertise in getting minerals out of the ground. So I think we're going to see a tremendous amount of work in the lithium world. So, you know, I think Bloomberg NEF is ringing the bell, but I think they're a little late. I think that, you know, those of us who have studied this begin to realize it. And I think we're in that curve. I also think we're going to see, you know, well before 2030, the numbers that they're talking about. The amazing thing is that if you read the current press in the United States, they're all talking about the slowdown in EVs, and saying the same thing in Europe. In other words, let's not fight this fight. You know, we'll just stay the course. We'll keep going with the, you know, the internal combustion engine, and maybe this will all go away. It's not going away.
Yeah. Good point. Very, very good point. So this is a, you know, step back. This is a massive revolution. You need to prepare now. And yet we're seeing some companies like the legacy autos putting their heads in the sand. And yet you see China and countries investing heavily. So this is going to be a disaster if you don't step up. This is big. And so Tesla, you know, you and I know this, and many investors know this, but it's also true that many people don't yet realize that this EV revolution is this big. You know, it's a once in a generation opportunity for this massive market size being up for grabs.
Yeah, and we have to ask ourselves why Bloomberg NEF talks about China as the big winner versus the high price of US-based cars. So I have to say that the first thing to say is that Tesla need to get their low-price next-gen out into the marketplace. I believe that's coming. I think it's coming in the coming year. I think we will see not just announcement, we will actually see vehicles in plastic wrap, you know, driving around the streets. I think it's a very important moment. I think that that would indicate to OEMs, traditional OEMs, that it's time to shake hands with Tesla. The other thing is, I think we're going to see some very, very important developments in Europe in the coming year. I mean, Daimler, BMW, Volkswagen have to make serious moves. They cannot continue in the current vein, because what's happening is, this is an earthquake. The other people who have to make serious moves, Toyota, Honda, Nissan, if these guys don't make moves, we talked about Thailand. Bloomberg NEF talked about Thailand. Thailand's where a huge percentage of Japanese cars are manufactured. Thailand's moving towards, manufacturing Chinese cars. Think about that. It's almost unprecedented.
Let's share more data, because this is exactly what I'm going to share next. It's very interesting, but China is making huge moves. And if the foreign brands, in the perspective of the Chinese market, because the foreign brands and the European brands trying to have a presence in China, they're struggling. And if they do, the world is about to change. So let's show some data here. Alex Voigt, he's our resident expert in Europe. He shared this, which is the foreign brands lose market share in China. So foreign brands being anything that's not a Chinese-made brand in China's auto market. So from 2019 to 2023, 16% of the entire Chinese auto market went back to Chinese companies. So this is the Chinese companies taking over back from the foreign brands. And it's lost for foreign and in particular European brands. So European brands are losing share in China. So this is an interesting chart. It's a little confusing, but let me try to explain it. There are two scenarios. One scenario would be, what happens if the European brands are able to create a lot of competitive electric vehicles? And scenario two is, what happens if they're not able to create them? So if you look at this, this is what you're going to expect to see in market share in China from 2015 to 2030. This is the projection. And you can see the actuals is in dark green. Now, this dotted green line and this dotted blue line is what would happen if they're able to, scenario one, produce a lot of competitive advantage. Even if they create a lot of BEVs, you can see that foreign brands in total will still fall. If they're not able to create BEVs, that's scenario two, it'll fall even drastically. They'll just lose so much share. And then this one here is the European brands. This was foreign, that means everybody, all cars outside China, and this is European brands only. If they're not able to do it, you're going to see them continue to lose to just be 10% of all brands. So they need to get their act together, Larry. If they don't, they're dead. But anyways, it doesn't even matter. If you take a look at this, they're down. They're down, and they're going to probably continue down unless they do something drastic, like you said.
And we've seen this scenario before. We saw the Japanese incursion into the American market, the Japanese incursion into the European market. We saw the American brands die in Europe. We saw the Japanese take over from both the American brands and the European brands. So we understand the scenario. We've seen this whole thing happen before. And we're sitting back and, focusing on all the wrong things. Innovation is the only solution to this problem. Tesla's proven it. I mean, they are competitive in China. They're competitive with, really, really large cars for the Chinese market. And yet, there they are, the best-selling car in China. So what does it take to explain to these corporate types what they're doing wrong? Does Bloomberg NEF, don't these guys even read Bloomberg NEF? Do they only read the material produced by their own corporate bodies? It is extraordinary. It is extraordinary, and it speaks to the corporate cultures that we have evolved in our Western corporations. Averse to risk, very fat and comfortable, and very focused on last generation's problems. This is not going to cut it.
Yeah, I think they know, of course, that it's coming. They're just can't do anything about it. And then so then they focus on the short term. In the meantime, Tesla's doing incredibly well in China. And like you said earlier, that if they can release the compact car, then they will survive and do even better. But certainly they're not part of the foreign or European failure. And in fact, Tesla just raised prices again. So let's quickly report on that. So just a few days ago, Tesla China raised the Model 3 and Model Y rear-wheel drive price. I think you divide by 7 to get US dollars. We're talking very minor, $200, $200, $300 increase. And this follows price increases that they did for the long range versions last week that they did that. So they're able to raise prices, minor changes. But if you want to take a look at this from Roland Bircher at Pololi, he does fantastic charts. And you can see this is what's happened to the price history in China for Tesla's model cars. You've got the various models. This is the Model 3 rear-wheel drive. Then you've got the blue is the Model Y rear-wheel drive. Then you've got the Model Y in pink long range. And then in this orange color here is the Model Y Premium. So you can just basically see how in 21, of course, December 22, they raised the prices. And now they've just been kind of getting back to where it was, when it first started, just a little bit lower than that. Any thoughts on how Tesla is able to raise prices and continue to maneuver?
Well, a couple of things. The first is that, they've improved the quality of their product. They've constantly improved the quality of their product. The other is that they're constantly reducing costs. So not only they're raising their prices, but they're actually increasing their margins. And they're innovating. So they're living the innovator's dilemma. Remember, they're the innovator. The others are coming for them, and they're having to innovate beyond that. And so they're continuing to do that. I'm very, very comfortable with where they're poised for next year. I see this price rise to be, just the presage of what's coming in the new year. I'm very excited about what's coming in the new year. And, I just spoke at length about the bad decision-making in the executive suites of some of the Western companies. Look at good decision-making, and there it is. I mean, if I were to fault Tesla, it is, not bringing out the low-cost, the sort of bottom-end car earlier. But we had a pandemic, and I think there's somewhat of an excuse there, but I want to see that speeded up. But they're in a very powerful position, and with what's coming with the next generation of cars is very powerful indeed. So there's no doubt that they lead the way. There's no doubt that the Chinese are patterning after them, and they're trying to improve and are improving upon them in terms of cost, and in terms of model number of variants. And so Tesla's really part of this leadership, and it just points to the failure of these other corporations in terms of their lack of vision, their lack of action, and their lack of leadership.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com. Very, very well said, Larry. Appreciate that. I mean, this is why we're investors in Teslas, because not only the short term, they're doing correctly, like you said, but the big market is massive. And this is just the revolution to electric vehicles. And if you add in robotaxi, it's even bigger than all this. And Tesla is well positioned. So we just have to be patient. When you've got Optimus robots helping to build the cars, then costs will go down even further and no one can catch up. Anyway, so this is, we just have to be patient. Thank you so much, Larry. Follow him on X at Tesla Larry. This was fantastic. I really like this episode. Thank you so much, Larry. Bye-bye.